Welcome to Drill Down Earnings. We have quarterly results out from Box. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology, and Box is definitely one of them. So deeply involved in AI now, the conversation this quarter was really all about AI for Q1 earnings. Better than Wall Street's estimates, but what they showed on a year-over-year basis was their 4% revenue growth held steady, but the characteristics of that growth, the products that were working, were very different from what we used to see from this company. So on a year-over-year basis, as I mentioned, 4% growth, which is pretty strong. Revenues of $276 million for this company, and a GAAP operating margin of 2%. That's something. Non-GAAP of 25%, even better. Let's talk about what made things grow. So Q1 revenues, as I mentioned, growing up 4% year over year. Well, billings actually jumped 27%. I'm going to get into that in a little bit. But they said pricing, not seat growth, was the primary driver, because customers are going and buying more and more of the same products, or of differing products, I should say, but existing customers spending more is a great thing for this company. Now, profit margin's not so great. As I mentioned, only 2% on a GAAP basis, generally accepted accounting principles, GAAP. I had to think that one through for a second there. But what's interesting about this company here is because they've spent so much in R&D. The R&D spend is actually just on a percentage basis of revenues, about 26%, just what it has been. A tick higher than it was a few years ago, but not much at all. But a lot of their new offerings doing well. Like what? Like Enterprise Advanced, which they launched in late Q4. They saw strong adoption of that in healthcare and finance and government. And they said their customers are looking at unstructured data, consolidating their content, modernizing their on-prem solutions, and deploying these AI megadata extraction tools that look into this non-structured data, figure out what the heck it is, and figure out ways companies can use their own data to extract some AI answers to the problems that they're facing. They also announced that they're working with a lot of big companies, bigger companies even than Box, to implement these tools that use customer data, but using Microsoft 365 Copilot, IBM Watson Orchestrate, Google Agent Builder, Salesforce Agentforce, working with all these big companies and their tools to use Box's, the data that Box is able to access here to give customers what they're looking for and figure out what they've got. And these AI use cases, these agentic AI use cases, are increasing for Box. CEO Aaron Levie talking about that over and over again in the conference call. I mentioned their billings. Their remaining performance obligations, again, revenue's up only 4%, but remaining performance obligations up 21%. So existing customers are buying lots more stuff for the future, and indeed growing so much faster than revenues were. The market loved this. The stock was up 10% in after hours, trading up 24% in the last year. So 24% in a year, another 10% today. Fantastic move for the stock. Now, one of the things they talked about here was their business with the federal government. So because of what's happening with DOGE and big cutbacks in government spending, some existing players are getting dislodged. We heard this from Elastic many months ago when we were in Washington, D.C. talking to them. And indeed, Box is seeing some of the same things. They're also getting accredited to do different kinds of government work. They achieved something called, that I'd never heard of before, the FedRAMP high authorization, which will let them do some sensitive DoD and federal workloads they weren't qualified for before, which could be another growth area for Box. Here's what CEO Aaron Levie had to say on the conference call.
The AI, kind of first strategy that we've laid out for customers, I think is resonating. All of our customer conversations are either starting with or at some point in the conversation turning into really AI-oriented conversations around how companies can get the most out of their unstructured data, automate workflows, bring intelligence to their content. So a lot of momentum on that front. And then overall, we wanted to just be prudent with the overall environment. Obviously, it's a dynamic macro, and so just trying to balance all those factors right now.
So yeah, AI driving results for Box, and again, those RPOs, those billings numbers, really fantastic for this company. But what's your big drill down earnings takeaway? What's the one number that tells you a whole lot, that drill down earnings bite? Yeah, I've got that. So Box Q1 2026 earnings, your essential summary tells you that $276 million was only a 4% rise in revenues, but AI and AI products drove existing customers to order a lot more. So the billings went through the roof. So the one number you want to remember when you're thinking about what happened in Box this quarter is 21%. That's your drill down earnings bite, 21%. Because RPOs grow at 21%, so much faster than the 4% revenue growth that this company saw in the quarter. And it was really bullish for the stock and for the company. Thanks for checking out Drill Down Earnings. I'm Cory Johnson.